All right, good day everyone, and welcome to our insightful webinar on the key developments in anti-money laundering over the past year. My name is Pierre Simon, your host for today's session. 2023 has been a busy year in the field of AML, which has been marked by significant regulatory changes and technological advancements. In today's session, we will discuss some of the most important developments and their implications for us as compliance professionals. Joining us are two distinguished experts in the field. First, we have Roland Romata, who is a regulatory compliance expert in the UK and Europe and co-chair of the crypto working group at the Association of Professional Compliance Consultants. Roland, can you introduce yourself to our audience?
A very good afternoon to everyone, and welcome to this session. I've been in the regulated environment for near about a decade, working with fintech firms, predominantly operating out of the UK. Of the most recent years, we dealing with a lot of insurtech and payment services firms trying to get ready for the new environment, if you like, operating out of Europe on the MiCA PSD2 as well. So that's pretty much myself.
Yeah, thank you, Roland. And next we have Ekaterina Gabaraeva, who is an AML CFT professional and compliance expert based in the Netherlands. Ekaterina, can you tell us a bit about your background?
Hi, everyone. Well, I'm coming from a traditional banking environment, actually. So started in consulting and AML CTF consultancy services, mainly based in the Netherlands, but also more across the globe for the UK banks and also outside of Europe in general, and specializing in setting up AML frameworks, also quality controls on the overall anti-financial crime establishment within the banks and financial institution.
Great. Well, thank you both for being here. Before we start the roundtable discussion in a bit, let's have a look first at the most important changes and developments that took place last year in 2023. Let's first have a look at the most important laws and regulations. So, of course, already shortly mentioned by Roland in his introduction is MiCA. MiCA has been published in June 2023. So a little bit over half a year ago, when it was published in the official journal of the European Union. There were actually two main developments as well after the publication, which were that the regulatory authorities, especially the European Banking Authority, but also the other European supervisory authorities, they launched consultation packages to focus more on their technical standards and guidelines. Which will focus more on the role, of course, on crypto asset service providers and other parties involved in the MiCA regulation. One of the most important things will be the date of application, which in principle is the 30th of December 2024. So that's going to be the end of this year. Some of the requirements will already be applicable by the end of June this year. Then moving on to the next law, which was passed last year as well, together with the MiCA regulation, which is the Transfer of Funds Regulation, also known as the Third Wire Transfer Regulation. As is the case with the MiCA regulation, this will also go live or be applicable at the end of this year, so the 30th of December. One of the main changes is that this, of course, is an amendment of the existing Transfer of Funds Regulation. And the main focus here was that the definition of funds was extended with also crypto transactions, crypto funds, meaning that it's also now applicable to the crypto sector. So whenever there is a transaction from one exchange to the other or a wallet provider to the other, they have to comply with the same rules as the traditional banking and payment sector have already been applying with before the application of this new regulation. Then moving on to sanctions. Of course, the last 2 years, but especially last year, sanctions have been passing everyone's view. And we had not only the 11th, but also the 12th sanction package against Russia, which was introduced last December. And of course, we can spend a lot of time on sanctions, but I will try to keep it briefly. The main changes were that some of the existing council decisions and regulations were updated based on the 12th package. And the main focus here on this 12th sanctions package was on diamonds. So the biggest diamond company in Russia is also in scope of sanctions. Also, a no Russia clause was also implemented, which focus on the re-exportation of goods to Russia via other countries. Also obliges exporting companies and others to have a no Russia clause in their agreements. Also, additional import-export controls and restrictions were applied. And also, as was the case with the other packages, a lot of additional individuals and entities were added to the list. So in total, we had 61 individuals and 86 entities added to the sanction list. Then moving on to the latest developments and guidelines. There are only three, which I would like to highlight a bit. The first one is the changes to the recommendations of the Financial Action Task Force. There were in total last year 2 big changes to the recommendations. The first one was back in February 2023, which is a revision of recommendation 25 and also the glossary definitions of beneficial owner. The second one was a little bit more recent in October 2023, where recommendation 4, 30, 31, 38 were revised, which focus more on the asset recovery of the standards and also the glossary definitions related to asset recovery. And the final change was the revision of recommendation number 8, which focuses on the non-profit organizations, which was a clarification amending recommendation 8 and strengthening the implementation of focused, targeted and risk-based measures on the non-profit organizations. Then looking at the European Banking Authority revised guidelines, there were a couple of guidelines which were updated. I think the most relevant was the guidelines on the MLTF risk factors, which added some details on different sectors, so the sectoral guidelines in this document. The other important guidelines which was published was the guideline on the role of the AML CFT compliance officers, also known as the MLRO, which will, according to the EBA, the European Banking Authority, will play a bigger role also in conducting risk assessments, taking the lead, which, especially in some countries like the Netherlands, can be a discussion, because who should take the lead? Is that the first or the second line? Well, these guidelines are clearly that the AML CFT compliance officer, meaning the second line, should play a more active role in managing AML CFT risks. And also another important guideline is the guideline on the use of remote customer onboarding solutions. Then the final one, looking more closely to the Netherlands, we have, as of May 2023, the publication of the so-called risk-based industry baseline standards by the Dutch Banking Association. And this is interesting because they focus really on how to take a risk-based approach when conducting customer due diligence. Although the focus is on the Netherlands and the banking sector, still, and we will discuss this in the upcoming discussions, looking at the topics they published, for instance, UBO identification and verification of UBO's identity, pseudo UBOs, enhanced due diligence measures for high-risk third countries, expected transaction profile, etc. But also the sector-related risks related to, for instance, how do banks deal with onboarding crypto companies while applying the risk-based approach. So this is something we will dive in a little bit deeper. But we do think with this publication that it will provide a lot of information also outside of the banking sector and even outside of the Netherlands. Then, as mentioned, there are many other interesting topics to explore. However, as you can imagine, in today's roundtable discussion, we will only look at the 3 main elements, which are the third wire transfer regulation or the transfer of funds regulation, as I mentioned just now, the Dutch Banking Association risk-based industry baseline, and MiCA. So let's dive into our first topic. And the way we are going to do that is based on a couple of statements. So let's start first with the third wire transfer regulation. Does it make it easier for crypto exchanges and wallet providers to perform KYC? And first, I would like to ask the question to Ekaterina. Could you give us your thoughts on the practical application of this amended regulation and share your experience from a KYC perspective in dealing with the transfer of funds regulation? So in other words, what can crypto asset service providers learn from the banking sector?
Yes, thanks, Pierre. I think first of all, I would like to thank you for the rewind of 2023. I think it was a productive year for AML
Yes.
industry for sure, and 2024 will be a very busy year of application and implementation of these requirements. And of course, TFR is one of them. I like the statement. It definitely makes it easy and more standardized to apply the KYC requirements also for the transfer of funds for cryptocurrency providers. What I like about it is the standardization across the sector. And a key lesson learned that I can share from the banking industry as such is really get the basics right. And I would not look at this regulation in isolation, but take, of course, MiCA that we will discuss further, TFR, and also other relevant developments from this year, and conduct a comprehensive risk assessment of your organization, understand your business, and have the right data, right setup in place to be able to facilitate the implementation. Here specifically, what is key is to really grasp what is required when it comes to the data related to your originator, so the originator of the transfer and also beneficiary. How do you collect it, and also how you deal with counterparties which are not registered in the European Union. I think the latter will be the most challenging part of the implementation of this regulation. So for the EU companies, it will definitely make it easier, but for the counterparties which are outside of the EU, you would still need to have the right data in place, outreach, and the full analysis to be able to satisfy this legislation.
Yes, indeed. Thank you. And then for Roland, what challenges and opportunities do the new reporting requirements and identification rules pose for compliance officers and financial institutions?
I think it's generally speaking, and looking at the whole year, thank you very much for the run through of what happened last year and the incoming regulations. Overall, it's a huge opportunity for the financial services sector, not just crypto, but as well as banking and payment services. It unifies, and the lack of better terms, it creates a chain across the whole sector, and it becomes easier for, provided that the appropriate arrangements are in place, it becomes easier for compliance functions to see where the chain is broken, where the necessary information is maybe not as forthcoming, not as reliable, not as well structured. So in theory, provided that the industry implement and comply with the requirements, it should make reporting easier. When you look at, again, the European side of things, when it becomes more of an international transaction or a setup, it will bring certain difficulties with it, as quite rightfully been mentioned. But again, if the relevant assessment has been done and the procedures have been set up, it again would automatically feed into the risk arrangements within the firm, and controls can be developed for that as well. So I think overall it is positive, and it should make compliance and reporting more streamlined, more easier. At the very least, it would be quicker at flagging risks that have been standardized as a result of the new requirements.
Exactly. And also following up on what Ekaterina mentioned, the distinction between the EU and the rest of the world, do you also see that there will be, of course, in the EU, it's pretty straightforward, right? It's a little bit more transparent, but do you also see challenges for non-EU based companies?
Yes. I mean, when you say non-EU, the rest of the world is quite, colorful and varied. So depending on what the arrangements are, from US to China, it will pose certain difficulties. But I think when you look at the pros and cons of the relationship, it will, in terms of a black and white arrangement, if a firm cannot cater for the requirements, then the result is relatively straightforward. Maybe that's not a relationship they should be entertaining. And I think that's almost what makes it easier. And I know we're almost talking about in a hypothetical arrangement, but yes, there will certainly be difficulties when we're looking at the international platform.
Exactly. All right. Then let's move on to the second statement, which is the Dutch Banking Association's risk-based industry baseline. Can this be seen as a global benchmark? Starting first with Ekaterina. So from your experience, how effective do you see the Dutch Banking Association's model in mitigating risks compared to other standards?
Yes, it's a good question. It's relatively hard to compare, I would say. What the Dutch Banking Association definitely adds value with is providing tangible examples how the risk-based approach needs to be applied. It's not a new notion. The risk-based approach has been there for a while, but for some reason it has been quite challenging to apply it. And I think one of the aspects out there, it's how do you document your rationale when deploying the risk-based approach. It's also understanding your business very well, and also if you read through the Dutch Banking Association the industry benchmark, I think that notion is across multiple instances and approaches, is that for example, when you need to conduct your CDD on a CASP, the crypto asset service provider, you need to very well understand the type of the business you are dealing with, the industry, and deploy the relevant due diligence measures, mitigating measures to address this specific risk. So I think it very much requires further maturity in the mindset, also of compliance professionals, to not apply rule-based approach and really standardized approach, and really elevate the compliance framework to react on specific challenges that your customer base is facing, especially when it comes to relatively new mechanisms that we are facing. Also stay up to date with all the technological developments that we are seeing. In this sense, I find the industry benchmark quite useful tool, and I think also outside of the Netherlands, the compliance professionals would be quite curious to look at it and apply similar standards.
No, exactly. And I do see a lot of comparisons compared to what the UK have done in the past already, right? It's a little bit more detailed descriptions, examples, and how to implement a risk-based approach. If you look previously at the guidelines, or actually the good practices provided by the Dutch Central Bank, DNB, they were pretty much interpreted as being rule-based. So this is a big step in focusing more on the risk-based approach. And also, and probably you've also have the same opinion, that these guidelines, or at least these standards, they give a lot of practical examples. So for instance, if you deal with a registered CASP, for instance, in the sectoral guideline they published, if it's registered in an EU member state, then that's one of the components to consider. But there are many other, and if it's of course outside of the EU, then it becomes automatically medium or high risk. So, and then you need more information, more documentation. So those examples, I think, are really useful also from a compliance professional perspective. So what are your thoughts about that, Ekaterina?
Yeah, definitely. I fully agree with you. The examples are extremely useful. For me as well, when I look at the standards and example, it's really it's really the application that is going to be quite not per se challenging, but I'm curious to see how the industry will apply the standards. I think a lot of it has been already there, and the same principles as applied to the regular traditional counterparties, I also apply to the CASPs, where I do see quite a big improvement needs to be done is in the documenting of your risk-based approach, because the regulators would always want to see the justification why you did not apply certain requirements to a specific company. So why did you apply a lighter approach to the specific counterparty? And that's where the documentation of your company-wide risk assessment and also risk-based approach to the individual customer CDD is becoming crucial to really draft those rationales, how we call it, in justifying the due diligence measures applied and how you mitigated the risks that were identified.
Exactly.
Yeah.
And maybe, Roland, maybe a tricky question because you're not really well known with these standards, but still, I would like to ask you, based on what you just heard, do you think these baselines can be eventually considered a global benchmark?
I think, generally from my experience, when guidelines and practical examples are being provided by the regulator, there is that risk running in the industry that they take it as a minimum requirement. And one of the discussions we always have with our clients when we work on their framework is to cooperate with their key stakeholders, whether that's downwards the chain or upwards the chain, and effectively embed it from a cultural conduct perspective. That would result in firms looking at it from almost like an outcome. Why do we want to comply, and how do we look at these particular guidances? When it is driven from that perspective and there's a full cooperation, then yes, there is that potential to become a much wider standard and actually contribute to enhancing, even not just as a regulatory requirement, but as a self-driven industry standard itself. Ranging from a onboarding step rather than coming out as an annual audit or review in the middle of the relationship. So yes, it does, and every guidance given by any regulator is always welcomed, whether it's right or wrong, because that triggers the discussion, it raises questions. Time will tell, I suppose. There is a lot on the table for the firms.
No, exactly. I think because specifically these documents, these guidelines or baseline standards, of course, have not been written by the regulator itself, like it was in the past. This is actually by the banking sector. I know that at least the larger banks and probably also the smaller size banks work together in developing these benchmarks. So interesting. Then, Ekaterina, could you briefly touch upon the upcoming and released DNB AML CFT Q&As and good practices? And more specifically, how significant are these in the current AML CTF landscape?
Well, definitely very, very significant. I think it kind of it goes in combination with the Dutch Banking Association risk-based industry documents that got released. But in general, what we see is that the industry in the Netherlands is sharing best practices. So the banking industry has already built certain experience, and with the support of the regulator, who has been performing obviously few of the supervisions across past few years, the Dutch regulator is sharing now these best practices within the industry. So definitely it will have a big impact. We see a couple of really, really practical examples in this in this Q&As, for example, how to perform the transactional analysis, like peer grouping example, right? So how to make your analysis more efficient. And here I see a really kind of groundbreaking development that also the regulator is looking towards the efficient and effective application of AML regulations, how to make it much more effective. So really achieving the efficiency as well, while not compromising the actual added value of implementing the rules.
Exactly. And one thing that I noticed, at least with the development of what I mentioned before, is the Dutch Central Bank used to publish a lot of what I call good practices, but they were interpreted as being rule-based, pretty detailed on the one hand. Now there seems to be a development in more Q&As. So the obliged entities stay responsible, like the law states, and they will just give guidance in the form of Q&As, like, for instance, also the European Commission has done in the sanction field. Do you also recognize this development?
Yeah, it seems like this, indeed. And this Q&As is more kind of I would even call it more informal way of communication and providing the view of the regulator is definitely adding value, because instead of indeed being much more rule-based, it opens up more possibilities towards understanding, is the regulator open to the adoption of the new technology, what are the conditions, and so on. So the application, for example, of artificial intelligence in AML space has been quite a controversial topic in the Netherlands over the past couple of years. And those are type of the documentation and best practices that it's very helpful also to receive from the regulator.
Indeed.
I think one of the ways to deal with regulations, and maybe to make more sense of it, and I'm not saying it applied in every circumstance, but try to look at it, and I can see more and more regulators moving into that kind of approach, is to look at it as an outcome-based regulation, if you like. And the FCA in the UK is openly doing this, where they set the standards in terms of what the outcome of a given activity needs to achieve, whether that's from the client's or customer's perspective, or the transactions or the investments. And for that, there are certain rules. So if you do look at AI in the AML perspective, for example, the outcome of that is then it maintains compliance with existing requirements, it's reliable, the provider isn't going to go under, it remains updated. So the outcome is to have a comprehensive, robust system, but at the same time, the firm understands what's being delivered by it. So we get a lot of hype about having AI in businesses, which is great and good. But again, it's not just, oh, we've got AI for AML, so nobody needs to look at it.
Exactly.
If it says it's good, it's good. If it doesn't, it's not good. We walk away. That's not what they should do.
Roland, let's hold the thought on AI. I want to come back on the AI topic. Before we do that, let's move on to the third statement of today, which is focusing on MiCA. So the statement is as follows: MiCA's role in enabling banks to offer crypto services. So Roland, what are, in your view, the potential risks and rewards for the crypto sector with banks also entering this space?
I mean, my initial statement on that one is it's been notoriously difficult for any CASP, or in fact, any business touching crypto, to open a bank account. So that's kind of the default situation. I think with MiCA coming into play, combined with PSD2, and it should be recognized that PSD2 and MiCA are operating in tandem, in harmony, if you like. So it's going to open up avenues for banks, traditional banking partners, and I may stand corrected on that one, to support the crypto assets and crypto payments and general investment in a more proactive way, open up additional services. So it's going to enhance competition. But on the other hand, it's going to somewhat tidy up the European landscape in terms of crypto businesses and CASPs. And it's going to level out the playing field. It's going to open it up for investment opportunities. It will allow passporting. It's going to be a more trusted and transparent part of the established financial services sector. So all in all, it will be great. On the flip side, businesses will have to do a lot of work to meet the requirements, and the single directorships will probably be really, really rare to come across going into 2025, because compliance requirements will be present and regulators will be required to monitor and enforce as well. So I think it's going to be very good to bring it into traditional and mainstream area and accessible for everyone. And again, having that consumer protection at the forefront, but it will create hurdles and expenses for businesses to overcome.
Indeed, yeah. And Ekaterina, what are your thoughts on the developments in relation to MiCA and the regulation focusing on the crypto sector?
Yeah, I think Roland has mentioned quite a lot of points, very relevant ones. What I would like to add as well is the increase of the trust within the financial system. I think it's one of the main benefits that I see MiCA is introducing. And it goes, of course, it comes with a price. I do recognize the challenges that crypto asset providers will have implementing the comprehensive AML requirements, but also other attestation, certification requirements. But at the same time, indeed, it will be to a certain extent easier to operate within the EU market as such. And for banks, definitely it offers a lot of opportunities, not just dealing with CUSPs as clients, but also providing crypto services and expanding their traditional product offerings. So I think indeed we will see more competition in the market, more trust, transparency in the market. But at the same time, this year will be quite critical to actually obtain the relevant authorizations, to get your AML CTF frameworks in order or simply established, have the right systems in place, flexible enough for future changes, because reading this legislation and kind of in combination with 2023 developments, it does seem that there will be further amendments, developments in the future. More clarifications are coming in 2024 from the European Banking Authority. So hopefully you have already commenced your work, but if not, then please do so as soon as possible. Definitely we see a lot of good developments in the market.
For sure.
Yeah.
I think one of the aspects or trend, if you like, that we notice back in the days, and I do mean a number of years ago, I think the clear focus of the regulators were around risk management as a general umbrella. So, are there sufficient policies, training, et cetera, in place, and reporting? Now, AML and CTF got its own spotlight. So it's going to the extent, particularly in the UK, we've seen it a number of times where the regulator quite minded to refuse a licensing application purely because they feel the MLRO doesn't have the necessary experience or qualifications, which is almost like a chicken and an egg. How can you get it if you don't allow me to do it? But that brings in other aspects of consideration for the firms, which is, are they financially in a stable position to afford compliance? MLRO doesn't come cheap these days, particularly with the scarcity of it. They can't solely rely on an outsourced service provider because they need to have an understanding within the business, NMBCP, et cetera. So there is that shift from understanding how the business is working and who our clients are is one thing, but having a really, really detailed, thorough, proactive understanding of the MLRO risk, of the AML CTF risk, and having an appropriate MLRO with the relevant useful reports rather than just a boiler template. I think that is going to be one of the biggest hurdles.
Yes, maybe jumping on this thought, I think it also presents an opportunity for compliance professionals from traditional banking sector to expand their knowledge in crypto, because there are a lot of lessons learned that we build in traditional banking industry over the years, and a lot of it can be easily applied also in crypto, given that the regulations, which AML CTF regulations applicable, are practically the same that were applicable to the banking industry over the years already. So yeah, good luck to everyone who is going to develop the skills.
And I think we can talk for hours on these topics. And of course, like both of you, I would love to continue this conversation, but unfortunately our time is up. But before we close the session, maybe we can briefly discuss the role and impact of expanded AI application in AML CTF. Ekaterina, your thoughts.
Yes. Yeah, so the role is definitely big. I think the key component here is the efficiency of the processes. What I see is, as well, coming from a traditional banking sector, I wouldn't say that the application of AI is that extensive at the moment, but the process has started. I think a lot of developments are ongoing in getting the AI capability involved. It is very much task focused, so separately for CDD, so customer due diligence, separately for monitoring of transactions, sanction screening. So the AI is deployed to solve very much targeted actions where typically a lot of human effort is required, and deploying also the risk-based approach.
Roland.
If I may, so as part of our services, we also offer RegTech solution to our clients. One of the, we're working on looking at AI integration as well, but firms really need to understand how AI works. There are a number of models out there, GPT being one of them, and how effective a particular model is depends on the training, depends on the data behind it. So you can really tailor an AI system to be really, really good in a particular very narrow scenario, but it's never 100% reliable. Unless it is pure mathematically verifiable, it's never going to achieve 100% reliance. So when firms looking at AI being part of their business, they need to understand, A, what language model it is, what is the level of accuracy it can achieve, and then also what it is used for, what data it's been trained on. The flip side is when you outsource this and you use AI-based solutions, you need to do the due diligence. You can outsource, but you cannot outsource your responsibility for compliance. So even if the provider is saying we do it right, but then they're not, you're still responsible for any enforcement action. So it's a high risk a solution and approach. Yes, it can save a lot of time, but caution needs to be applied.
Great. Well, thanks both of you, Roland and Ekaterina, for your invaluable contributions. And also a special thanks to our audience for joining the session. Before we go, I would like to remind everyone that our next Compliance Insight Roundtable live event is scheduled for January 25th, where we'll be focusing exclusively on the MiCA regulation. This session will be critical for anyone seeking clarity on who falls under MiCA's scope, the steps necessary for obtaining licensing, establishing an effective AML CTF framework, and also understanding the implications of KYC for entities covered under MiCA. So don't miss this opportunity to stay ahead in the field of financial crime compliance. On behalf of, well, not only me, but also the speakers today and everyone behind the screens, thank you once again for joining us today. And we look forward to seeing you at our next Compliance Insight Roundtable. Have a great day.